Great to see a lot of you again. I'm assuming that ETF is a very interesting topic for including me, a lot of us here. And we have Akshay Bhargava, our founder and chairman, and we have Sarthak, our product head. And I'm going to now hand it over to Akshay, to take us through this session. Please keep your questions coming on the chat, and we have more things to discuss in the during Q&A. So Akshay, over to you.
Thank you so much, Shruti. And welcome everyone. Really, really excited to have you here. I'm sorry I wasn't there last week. I was on holiday, but Saturday morning I got a message, I have to do the webinar. And then I realized I was on holiday and I didn't need to do it. But great to be back, and thank you for joining. Today's subject is ETF investing. And, some of you may be familiar with it. Some of you may not be familiar with it. So I'm really going to approach it very simply. I'm going to start with first principles like I always do. And if you have any deeper questions on technicals and how these are constructed and how our algos work, we have the full team here from Bridgeweave to answer you. You can see Sarthak, you will see Shailesh, who are, and so you have all the technical specialists. Before we do that, Prabal, I'm going to ask you to post some questions just so that I understand the audience demographics. So I'd like to see how many years of investment experience do all of you have? So Prabal, would you mind putting up that question for the team? Yes.
It's up on the screen, actually.
Yeah, I can see that. Okay. Okay, that's very useful. So this is very interesting. What this is saying for people who can't see it, that 44% of the audience is less than 1 year, but equally 40% is 3+ years. So we have a really good balance between first-time investors and experienced investors. So that's really great to see. Prabal, can I ask a second question? This is a question where, what is your, what age range do you kind of fit in? Not asking your exact age, but just your range, whatever you want to answer. And Prabal, I'm going to ask you to post a third question after this, which is, have you made money in your investing experience? So this is again very good. The age distribution is reasonably even. The biggest group is 30 to 40, and so on. Thank you. So Prabal, would you mind just putting up the third question, and then I can move on with the... I'm really interested to see, have you made money most of the time, more often than not, lost more than made, and consistent losses? So, okay, so most people are making money either most of the time or more often than not. Thank you, Prabal. We can remove the questions. Really useful. So, like I said, today's subject is ETF investing. I'm going to be talking about this, and I will tell you how some of the ETF products work, what are ETFs, why you should invest in ETFs, and so on and so forth. But before I do that, I want to introduce one of our users. His name is VK Sarang. He's a really, really interesting individual. He works for a bank. He is a machine learning, data science expert. So his experience and his investing story is really, really very interesting. So what I would like to do is to invite Sarang to join me. Shruti, can you spotlight
Yes.
Sarang and put him together with me?
Hey, hi. Thanks, Akshay.
Hi. So welcome, Sarang. Really nice to see you, and thank you for agreeing to talk to our group. What I would like to ask you is talk to us a little bit about your investing journey, because when you told me, I found it very fascinating that somebody, with a very disciplined and structured mind but who was new to investing. How you managed to get comfortable and the success that you've had and what you've done. So really interested to hear that.
Absolutely. I think, all right. So it's just been a couple of months with InvestorAi right now. I think I started taking the subscription March, around the end of March, something, right? So, and I'm not an expert in investing, or I haven't been investing. I'm pretty new to it. Though I think the last couple of years been investing on other mutual funds and so on, but not really in the field of equity or investing in these. Although I had accounts open, but never was confident to be very sure of what to invest and which would make profit loss kind of. I come from a field of data science, like you said. I work as a data scientist, been working with different banks as well as other organizations. So my confidence in this field, of course, it will always be there because I believe in this field. So when I came to know that you particularly use AI for generating these insights, that was very, very interesting for me. I, in fact, came to know through LinkedIn because one of your employees that I'm aware of, because somewhere I've been engaged with them in previous work. So I came to know through LinkedIn about you. And I took the subscription, and when I came to know and when I joined, you started giving suggestions on which one to invest. That's when I started investing. I started a very small amount. I started around 10,000 something initially, and that was the first, I think, 1 or 2 days. And now I invest around 6 to 7 lakhs just in the last 2 months because of the confidence that I've developed. Just to put across some numbers, on average, I would say if you see last two months, I increased investments, but initial 1 or 2 weeks, it was around 10,000, 50,000, which got increased to around 6 to 7 lakhs now. So in last 1.5 months, I think the return was around 35K after the profit and loss. That is what been made. So I think it's something I think really good for me because this is free money in that sense, right? So money is making money. So it's definitely good for anybody.
It's hard-earned money.
Now, we spoke about, of course, earlier, and one of the things that we touched upon is the investment strategy that I'm particularly using. I'm very new to it, so I wouldn't be very sure of different investment strategies people who in this field would be using. But for me, it's very simple. What I do is I work. So around in the morning, so around 9 o'clock, the market when it starts around that time, the insights from InvestorAi starts generating. It gets generated around 9 o'clock. That's when I look into it. By around 9:15, I shortlist these stocks that you recommend. Every day there are fresh investment, these insights that come out. So I shortlist these particular insights that come out and put it in the watch list in Zerodha. I particularly use Zerodha for trading. I don't do intraday. I don't do any of those. I don't do F&O, any of those. I just do delivery equity. That's what I do. And because your insights say that in the next 30 days, it's expected to go up by 3%. Everything that is expected to go higher. So what I do is I put them in the watch list, and I look into particularly a couple of more things, whether it's a mid cap, it's a large cap, or it's a small cap, that particular one, because small cap, there's a possibility that you invest and you won't be able to take the money out for a while. It might get stuck. So I invest particularly in mid cap and large cap that you particularly mentioned in your insights. And put the stop loss and stop gain at around 3% of stop gain and stop loss at 4%. And then I don't really look into it. I just get the emails and notification from Zerodha saying that it's been triggered. So I would say 10 stocks that I invest, let's say in 2 to 3 days time, I would get most of the 8 of them in stop gain and a couple of them stop loss. So overall, as I said, the return's been great. And I'm quite happy with it so far. And I think the confidence is going up, so I'm going to keep on investing more, going to pump in more money and see how it works. Now, recently I also went for the global market subscription from the India market. I changed it because now I'm planning to invest in the global market as well. Yeah. So, yes.
And if I can ask you, Sarang, do you see a difference when you look at the global market versus when you look at the Indian market, or is your process exactly the same for both?
So I opened the global market through, some of you may be aware of something called as click trades. Somebody had contacted me on for the click trades and said that you can invest in all the things, all the different assets, including ETFs, cryptos, everything there. So I just registered. So I'm very new to it, but today's session is on the ETF. So I was particularly interested in that too, because I'm thinking whether I can invest ETFs global market in that sense.
Yeah,
so that's one of the
excellent.
one thing, but actually I didn't get a chance to speak to you also. I work in this field. I work in the field of AI. It's not very easy to get something in place like this. To have an AI model be very successful. So something that your team is doing is, in that sense, is great. To get an AI model work in this way and get the insights generated. So yeah, okay.
No, that is very true. The team has worked really, really hard. और 2-2.5 साल से कर रहे हैं. So now it is at a point where it is. So it takes time. It takes a lot of time.
It's not easy. It's definitely not easy. So yeah. Okay, I think that's all from my side. If any questions, of course, I'm open to it. Otherwise, yeah.
No, thank you very much. Thank you for sharing your experience. I think there are some really interesting points that I'm going to refer to as we go forward. So thank you very much, and I hope you continue to make money and get more confidence in this whole thing. And it is not free money; it is very hard earned. You are going through a very disciplined process for it. So
yes,
thank you, Sarah.
Thanks, thank you. I'll just
okay. So everyone, like you heard, here is an investor who has got the confidence over time by looking at signals, investing small amounts, and so on. And the point he made about ETF investing, he's starting to look at international markets. ETFs are a big part of international markets. ETFs are not very common in India. Mutual funds are much, much more common. And so if you look at the ETF universe in India, it's really small. But it is an important universe. My personal view is that ETFs are more important to investing than mutual funds. And let me share with you my thinking. So what is an ETF? It stands for Exchange Traded Funds. So it is like a fund, but it is traded on an exchange. And I will explain that in a moment. Basically, think of it as simple, transparent, and cost effective. Okay, and ETFs are a very good way to gain exposure to different types of investments at a very low cost. Okay, so if you look at the mutual fund world, your cost ratio can be anywhere between 30 basis points to 200 plus basis points. ETFs tend to be between 10, 15 basis points to maybe, in some cases, 80, 90 basis points. But they have a very different kind of structure. People ask me, what is why should you invest in an ETF? So if you're investing in the stock market and you have ability and the discipline to pick stocks, then chances are you will do better on stocks than you will do on ETFs. But sometimes not everybody has the time. So typically, you should look at investing in an ETF when you want exposure to a certain type of investment. You want to diversify your exposure. So single stock is not something that you want to do. You don't want to pay high fees because mutual funds are very high cost. And that is my concern with mutual funds. And lastly, you don't have time to monitor your investment all the time. Okay. So ETF is, I don't want to say invest and forget because you shouldn't forget your investments, but they're a relatively passive way of entering the market in a very systematic and a low cost way. Stock trading tends to require much more time, much more activity, much more regular intervention between and tracking. So not everybody has the time for that. So the big point here is how are ETFs different from mutual funds? That's the key to this whole thing. So ETFs are like shares. Mutual funds are not like shares. Okay. So if you're holding mutual funds, what is really happening is you are holding units in a collective investment vehicle, which is called a fund. Those units cannot be sold. So, you can't say, I want to sell it to my friend. That is not, the legal structure of a mutual fund does not permit that. You have to surrender the units back to the fund. The fund will redeem the units and give you cash, and then you can do what you want with the cash. So every time a mutual fund transaction, either it is a purchase or a sale, is with the mutual fund house. Okay, so when I buy a mutual fund, I'm not buying it in the market. I'm buying it from the mutual fund company. When I'm selling a mutual fund, I'm actually not selling, I'm redeeming. I'm going back to the mutual fund company and I'm saying, please redeem these units for me. And there is a redemption price. Now, it feels like the same thing because you're issuing an instruction and a few days later you get the money. But because the mutual fund company is issuing new units every day and canceling old units for redemption every day, they do a lot of work. And that work costs money. So if you take typically, let's take 200 basis points, 2% as a benchmark for mutual fund cost, of that 2%, roughly 70, 80 basis points, so about 35, 40%, is for distribution, all the sales and the distribution thing that you have. Roughly 50, 60 basis points goes to compensate the management team because they have active managers. Mutual funds are based on active churning and rebalancing every day and that kind of stuff. And the rest of it is operating cost. And the operating cost, one reason it is so high, because every day they are issuing new funds and issuing new units and redeeming old units. ETFs are very different. Once you buy an ETF, it's like a share. Okay, the issuer, the company that issued it, has nothing to do with it, a purchase or a sale transaction. The purchase and sale takes place on the exchange, like very much like a share. So the cost of a ETF issuer is very low in terms of operating cost. So that's why ETFs tend to be lower cost. The other reason they tend to be lower cost is because they don't change their holdings very often. Once they buy a set of high confidence stocks, they don't change it very frequently. Now, you could argue that they should change more frequently. I was talking to a ETF, very well-known ETF company in America, and they have an India ETF. And I said, how many stocks do you have? So they said, we have 100 stocks. Now, that is quite a large number. And I said, how frequently do you rebalance it? So they said, maybe once or twice a year. Now, my personal view is that that is not frequent enough, but you get the idea that typically ETF, providers will do a lot of research. They will buy a certain set of stocks, then they will sit on it. So therefore they don't do much intervention, and because they don't do much intervention, the costs tend to be much lower. Okay, so the cost difference between an ETF and a mutual fund can be as high as 1.5%, and the 1.5%. If you can lower the cost by 1.5%, that is a direct contribution to your bottom line, because if your returns go up by 1.5%, and that is huge, especially in today's market where interest rates are so low. Okay, so I hope you understand, and if you don't, I will be very happy to come back to this in the question answer session. There are many types of ETFs. You can get stock index ETFs that are the lowest cost because they just buy the index and sit on it. You can get sector ETFs, you can get style ETFs, you can get bond ETFs, commodity, real estate, leveraged ETFs. So these are ETFs that leverage their position, so the returns are much higher and they're therefore much more volatile. You can get inverse ETFs. So you want to short the market, you can also short it just by buying an ETF. And that's a very simple way of shorting the market and balancing your position. Thematic ETFs, literally hundreds and hundreds to choose from. Now, very soon, you will see some new ETF algos in our ideas corner. For users of Android, you will see it probably in July. So a few weeks away. Just bear with us because the team is working very hard to get them out. For some iOS users and on Apple devices, you will see them sooner. Okay. So there are two new algos that are coming. One is to help you find your own ETF. And I will show you both in a minute. The second is really dynamite. What we have done is taken the Alpha 330 algo and applied it to ETFs. And the way we have done it, so typically think of ETF, let us say the ETF holds 50 stocks. Okay, we have used the Alpha 330 algo for every single underlying stock. And if there is an Alpha 330 signal on any of them, we then count it. And then if there is, and as a result, we calculate the Alpha 330 signal at the ETF level through the underlying stocks. And if the signal is strong enough, then we will show it to you. So suddenly you now have a diversified portfolio that targets a 3% return over the next 30 days. That's a really interesting application of the Alpha 330 algo. Okay, so that's what I'm going to show you. I'm going to stop sharing the presentation. I'm going to put my screen up. By now you're all familiar with the drill. Takes a few seconds. Okay, so we are now back to InvestorAi Ideas Corner. So now you will see two ETF algos. One is ETF investing under investment ideas, and the second is in short-term ideas, Alpha 330 ETF. And I will show you both these things. So let us go to ETF investing. So it is telling you that there are 1,134 ETFs in the machine. And what this does, it guides you through a series of choices to identify the ETFs that you want. So there are various levels of selection. So the first level is, do you want asset class, or do you want geography, or do you want special? Let us just see what each of them mean. So let me just take asset class. So level 2 in asset class is, do you want commodity, do you want equity, do you want fixed income, or do you want mixed assets? So let us say I say equity. Then it asks me a level 3 questions. Do you want regional equity, sector, or style? So I can say, okay, show me region. Now it's asking me, what region do you want? Asia, Europe, global, rest of the world, USA. So I say, okay, I want USA. Okay. So now I have made all my choices. The machine has guided me through all kind of questions. I go next, saying, how do you want to rank these? So I said, okay, rank it in order of Sharpe ratio. Now, if you know Sharpe ratio, Sharpe ratio technically is the return per unit of risk. So it's a surrogate for risk-adjusted return. So higher your Sharpe ratio, the better it is, which means for every 1 unit of risk, you are making a higher return. So I like Sharpe ratio, so let me just take that. So now it is showing me all the ETFs that qualify. Okay, so now you can, some of these returns are pretty unbelievable. So let me just take the URTY. Let me take some of these ETFs, very high returns. And if I want to understand the ETF, I can just click on the right-hand arrow. And now it shows me the ETF score is 41 out of 100. The performance is fantastic. Sharpe ratio is fantastic. Cost ratio, not so great. So kitna hai? It is 95 basis points, 0.95%. So it's a slightly expensive ETF, but with this kind of performance, who cares? Okay. The other thing is maximum drawdown is poor, which means it's a relatively volatile sort of ETF. So you can say, okay, I like this, and let's show me this one. And here is again a very similar profile, slightly higher score, and a cost ratio of 1%, and performance very good, relatively large group, so it's $2.2 billion, and Sharpe ratio is also very good. So this way you can select any ETF you want, and then you can say, you can create this basket of ETFs, and you can click monitor, and then it will monitor for you. So I monitored it, and so let me just go back and show you one other kind of thing. So I want to now create a special ETF. So there's just one, and I can say. So
can we also see an Indian ETF that somebody has just asked us for?
Okay, so let us see an Indian ETF. So let us see geography, Asia, next, and now let me just select based on 12-month returns. So the first one is SMIN, iShares MSCI India Small Cap. Second is Wisdom Tree India Earning Fund. Then there's China and so on. So I can just pick, let me take this one. The returns are great. So let's go into this. So again, it shows you a very familiar score, ETF score of 55. Performance fantastic, Sharpe ratio fantastic. Maximum drawdown, not bad. So this is not very volatile. Cost ratio, not great. Again, 0.81%. But at 0.81%, if you take a similar mutual fund, the cost ratio will be at least double of this. So this is how you can do this, and the issuer is BlackRock Fund Advisor, so very well known house. And again, I can sort of monitor this and so on and so forth. Let me go to Alpha 330 ETF. So this is really, it works exactly like Alpha 330. So Momentum meets ETFs, uses AI-based Alpha Score to try and identify ETFs with a positive upward momentum to deliver a 3% return in 30 days. Okay. Of course, the universe is smaller. There are just 75 ETFs where there is sufficient underlying data. But 75 is a reasonably good sort of universe. So here are the ideas as of today. QQQ is a very well-known ETF because it takes the NASDAQ index. Okay, so let's go to QQQ. So what this is saying is that the signal came in on 20th of May, so it's low at the moment. If I go back to signal history, it came up a few days ago. But signal has 22 days remaining. So you should look at it. Since the signal was generated, it's already up 1.6%. And in the past, this signal has come up twice, and both times it has beaten the index big time. So this is a pretty good, and as always, you can look at live info, and it will take you to the ETF, and you can do your research. You can, it works exactly like the. Sorry, let me go back to QQQ. So the difference here is it now shows you the constituents of this ETF. So first, it shows you a multi-factor rank, and those of you who have used InvestorAi for value investing will be familiar with this visual representation. So across all ETFs, it's 63rd percentile, so it's pretty good. Future outlook is very strong. Consensus view is very strong. Valuation not so great. Expense ratio medium. And here are the top 5 stocks that comprise this portfolio. So it's Apple, Microsoft, Amazon, Facebook, Tesla. This is very, very strong. I mean, if you held this ETF, you would have done really well. It also tells you that there is a signal on Microsoft in the system today. So if I click on Microsoft, now it takes me to Alpha 330 for Microsoft. Okay, this of course you're familiar with. So this is really, really quite a cool kind of a thing. And I did not see it on the 20th of May. Had I seen it, I would have definitely bought QQQ. And it tells you a little bit more about this thing. So the issuer is Invesco Capital. It's an equity ETF focused on US markets. It focuses NASDAQ 100 equities. It's 161 billion. This is a huge animal. Okay, and expense ratio is 0.2%. See, this is what I mean. There is no mutual fund in the world that will give you this kind of exposure at 0.2%. Even Vanguard, who prides itself in being very low-cost index fund, will find 0.2% very hard to beat. Okay, and the one-year performance has been 46%. So I hope this gives you an idea. So this is what we have in the Alpha 330 ETF and ETF investing. The other algos remain exactly the same as they are. And as before, you can go to the home page. If you look at your watch list, there are all kinds of things that I'm tracking. And I'm sure one of these ETFs will be there very soon. Okay, I'm tracking too many things, so I need to straighten this out. But let me see, where did the ETF go? Yeah, so here are the ETFs I started to track. So here is a portfolio that I started to track on 19th of May, so a few days ago, and which was based on last 12-month returns. This thing is already up 33%. So there are two stocks here. One is BRZU, which is a daily MSCI ETF, Brazil, and here is another Brazil ETF. And then, as always, if any new ETFs come in, so it's telling me that there are two new ETFs that I should consider. So the machine knows what I'm tracking, and if I wanted to add that, I can add that. So if I can say, yes, please monitor, and if anything has fallen below my criteria, then it is now telling me that this ETF has delivered what it needed to deliver. So I can say, okay, take it off the list. So I've just changed my basket on the fly. Okay, and that's a very, very powerful feature. So now it will monitor my new basket accordingly. And of course, this is just monitoring. If you once we if you can trade, then you can not just say monitor, but you can buy as well. Anyway, so that's what I wanted to talk about ETF investing. I'm going to stop here, and then we can take questions, and I'm very happy to answer.
We have a lot of questions, and some are similar questions. So I'm going to take Giri Prasad, Viral Shah, Gaurav Dhoot. They all seem to be asking us the same thing. The question is, hi, can you share more details on how you can select global stocks or ETF? That's one. And is it possible to invest in global ETFs?
Guys, finding global stocks has been the sweet spot for InvestorAi from day one. Individual stocks, वो तो शुरू से हो रहा है, from the day you started, you can find individual stocks on Alpha 330 equity, you can find it on value investing, and so on and so forth. What ETF does is allow you to find similar ETFs. So the question is, the other question was, can you buy? Of course you can buy. But if you want to buy an international ETF, you'll have to have a LRS account. You'll have to open an international brokerage account. You'll have to fund it with some money. And then you'll have to buy accordingly. There are a number of places where you could do that. All large brokerage houses will allow you to open an LRS account. So if you want to do that, then that's easily possible.
So Akshay, Chaitanya is extending that question to ask, can he invest in ETFs through InvestorAi?
Chaitanya, right now, we don't have a buy button that allows you to trade internationally. The trade button that is available on the app today only connects you to your Indian brokerage account. Okay, and the Indian brokerage account is very powerful because you could have an account with any one of the 10 to 12 large brokers in India, and you will be able to put through the trade. Internationally, that is not yet available. It will come later in the year, but as of now, you will not be able to trade from InvestorAi. You will have to make note of the ETF that InvestorAi is telling you about, and then you will have to go to your international brokerage account and put the trade through.
Okay. So we have some on just some definitions, and Sarthak, if you want to, get some of these questions. But people are asking us, what is a Sharpe ratio? What is a cost ratio? And what kind of fees, when we say fees in comparison to a ratio. So they want to understand that.
Yeah, I mean, look, let's start with the easier of the two. Let's start with the expense ratio. It's, it's nothing but the amount of money you pay a mutual fund vendor or an ETF vendor to manage your own, to manage that fund. So it includes everything from custody, admin, and whatever is required to do the business. And like Akshay was pointing out, ETFs typically would be 0.20 to 0.75, maximum. But in India, in most cases, now regulation has come in, you cannot obviously charge a lot more, but it can go to 150, 200 basis points as well for smaller ones. So you're literally paying 10 times that cost if you're going mutual fund route. So that's one. So now let's come to Sharp. See, look, the thing is, I'd give you a definition, but that really won't, make any difference to your understanding. It's basically how much money you're making or returns you're making for the amount of risk you're taking. And again, these are measured in statistical terms. So, it's standard deviation, that's how you look at volatility, etc. And, if you guys take this little further, what is Sharpe ratio used for? If you guys are familiar, there is something called as a modern portfolio theory that looks at efficient frontiers. What does this mean? So again, this guy won a Nobel Prize for it in 1951, which, commented that actually diversifying your risk doesn't really lead to fall in returns, but it reduces risk considerably. And this is the foundation for a mean variance optimization, which is basically how do you optimally combine the funds to have the best risk to reward ratio. And that's often measured by Sharpe. And we will have a technical session where we will show you how these allocations are made, etc. But for now, this should be okay.
Thanks, Sarthak. Speaking of which, we have a WhatsApp community, and Prabal, if you can, just put up that poll. A lot of these questions that you're asking us, we continue to answer this in our community, and there's a lot of chatter on the InvestorAi community, and you can be a part of that. So if you could tell us
also, within InvestorAi, there is a glossary section. If you go to the menu,
Yes.
If you click on the menu, you will see glossary. And in the glossary, there are definitions of all the technical terms that we use. So, all you have to do is click and it will explain to you what the term is. And of course, if that is not enough, there is always Investopedia that you can look at. It will tell you.
Yes, Akshay, that's very helpful. So a lot of your questions, of course, you can self-help, you can see it by yourself on our app. Amit has a very interesting question, Akshay. So he says, due to very low liquidity, ETFs show wild movements and can break any AI engine compared to actual index or stock prices. How do you deal with that?
Let me take that, Akshay. See, the thing is, we've always, we have the biggest coverage in the world, one of the biggest. Even if you go to, I used to work with big investment banks, etc. Even we didn't have that kind of a coverage. And the reason always on coverage was one thing: what kind of data is available. The thing is, there are very different methods of dealing with, such volatilities. You penalize the beta, you write fabrics. As a matter of fact, some of you guys already know we are also working on a crypto algorithm, which are probably 10x more volatile than a standard ETF. So there are ways and methods to deal with it. Sometimes it's transformations, sometimes it's fabrics, sometimes even rules. So, without going into further detail on how every case is handled, that's how we do it.
Great. I think Gaurav wants us to explain max drawdown and just the spider web chart, Akshay. If we can just have that up, I think they just want to understand a little more.
Okay. Bear with me a moment. I will have to bring my phone. I disconnected it. So just pick up some other questions.
Yeah. While we do that, Sarthak, this one's for you. Nitin wants to know, how can I get a dividend split facility in ETF?
Dividend split
facility in ETF.
I'm not aware. Shailesh, are you familiar with what the gentleman is speaking about?
Yeah, I think what's being referred to is the our dividend of the underlying. How will it come to the securities? Now, there are two types of ETFs. One which actually reinvest their dividends, but actually most dividends actually pay out the dividend itself. So, for example, you are owning a Nifty 50 ETF, right? And most of their underlying announced dividend between April and May. So around May end or June, they will aggregate all the ETFs and pass it back to the investor, saying 1 rupee per unit dividend or something.
Aggregate all the dividends, correction. So they will aggregate and they'll pay it out, right? And there are ones which will reinvest. So I think you can look at the ETF data sheet, and they would actually talk about the strategy pertaining to dividends. And that's a good point. Or maybe we should also add that into our ETF definition.
Yeah, good suggestion. So Shruti, what was the question on the spider
Yeah,
chart?
it was to explain the spider chart, and within that max drawdown specific.
Okay. So let me go back to example I used QQQ, where the spider chart was
From play.
else. That was from here. Sorry, did I not? Sorry. What happened to the spider chart for QQQ? Yeah, so let me just take geography. Let me take Asia. Yeah, this is what we had done. We looked at India, 12-month returns. And the first one was MSCI India. If I just click on that, then it enables me to see the spider chart. So these are the 5 or 6 criteria that we are using. Performance is very clear how the ETF has performed. Sharpe ratio is the risk-adjusted return indicator. Maximum drawdown is the peak to trough ratio. So the wider the thing, the higher the maximum drawdown, and therefore lower the score. What you really want is a low volatility thing, because high returns normally come with high volatility. If you can find something that gives you a high return with low volatility, that would be fantastic. Now, this particular ETF actually does a bit of that. It gives you spectacular performance at a relatively modest volatility. And as you can see, it's given 100% return. So it's doubled in a year. Then the cost ratio is simply the cost ratio. This is 0.81% here. Volatility is how volatile. So maximum drawdown and volatility are slightly different. So you can have a chart that goes like this. So it's very volatile. But the distance between the highest point and the lowest point is quite small. In that case, the volatility would be high, but maximum drawdown would be low. You can have a volatile thing that goes like this, which is where the maximum drawdown would be high and volatility would be high. Okay, and size is simply the size of the ETF itself. Now, at any time you see this question mark that you can click on, and it will explain these criteria to you. I had talked about the glossary, and you can click on the menu button. You can go to glossary, and all these things are there. Just touch any one of them, and it will give you an explanation of what that term means. So Sharpe ratio, for instance, it now explains you the Sharpe ratio as to what that means. Okay. All right. So I'll stop sharing my screen.
Yeah. So Akshay, I think just if we can reiterate, I think the questions are still around, can they invest in Indian ETFs? But then if they need to invest in international ETFs, how do they go about it? I think even maybe explaining a little bit about global.
So let me cover that a little bit. So the ETF universe in India is really, really small. Okay. We are sort of evaluating whether it makes sense to add Indian ETFs or not. Now, international ETF universe is very large. So what we are sort of minded to do is to use the international universe, but I realize that a lot of people who don't have LRS accounts will then no longer not be able to invest in the international ETFs only. And the thing we are currently evaluating is adding Indian ETFs. Does that add significant value for an Indian investor? it's something that we are looking at. When we launch the ETF algos for everybody for general availability in the next several weeks, we will have decided and made up our minds. So please stay close to us, become part of the community, be part of the exchange, and because that's where we share some of our thinking, at the earliest time. So there is a good chance that we will add Indian ETFs. If it's an ETF that is listed in India, you will be able to buy it immediately through InvestorAi. If it is listed internationally, then even though it may be an India-focused ETF, you will have to use your international trading account to do that.
Our favorite question is back. I was wondering why no one asked this. Amit, thank you. When we look at all strategies of InvestorAi, the entry signal is generated, but what about exit signal, especially stop loss signal?
Okay, I'm going to let Sarthak answer that.
Yeah, so see, guys, we are addressing this in two ways. One is in terms of you can set your own. In that case, you're not calling it, like stop loss, but essentially a trigger. And once the trigger is reached, you are notified that, hey, your asset has gone and achieved that target, or it has fallen and done that. But more importantly, what we're trying to do is essentially have a dynamic stop loss. The thing is, most recommendations that come in today will have a fixed stop loss here. But what most people don't understand is, well, markets moving, and that prediction becomes stale very quickly in times of markets are so cyclical. It is very important to have that number change with the signal. So that is the current construct that the last folks are currently working on, where we're looking at every signal and its relative relation to what is happening in the market. That stop loss thing is dynamically adjusting. And remember, this is a very new construct in the industry. That's why we're testing it out rigorously before we let that out.
Great. Thanks, Sarthak.
A dynamic stop loss is something that is very, very different. It doesn't exist in the market in most places. It's something that it'll be a big innovation for us, but we, of course, will never release it until we are confident and satisfied that it will produce a good outcome for all of you.
Great. There are no new questions. So what I'm going to do is, some people have actually asked us, so really, if they have to invest in international markets, how do they get insights? What do we have? So I want to talk about the Global Pro plan that we have, because I think that will make it easier for everyone. So Prabal, if you can just get that up. Yes, so everyone, if you see the screen, there are two plans. Domestic Pro is nothing but an India plan. Think of it as an India plan, which covers all algos, all sectors, and all, whatever's in our universe in terms of stocks. And it is at monthly rate of $799, but we have a discount especially for all of you. If you join our WhatsApp group or write into support@bridgeweave.com, we'll of course share other details with you. But it's very simple, really. This is the amount. Global Pro subscription it covers about 20 markets today. Of course, US and UK is typically what most people who from India start looking at as markets from what we've noticed. So again, we have a 10% off on our annual subscription for that as well. And a lot of what Akshaya was talking about today in terms of ETFs, you can get a lot of that information if you subscribe to our Global Pro plan. The way to reach us is, of course, download our app and register, put in the code that you can see over here, which is WBNR14, and you will be able to get your discount. So we're on all channels today, on all social media channels. You can reach us as InvestorAi on Facebook, LinkedIn, Twitter, Instagram. And hope this session was useful to you. We have a poll that's up, as I'm speaking. But if you have any questions, do write to us at support@bridgeweave.com. We are on that WhatsApp group. The link has been shared, and we can continue this conversation in our community as well. So we look forward to a lot of you coming, on board, come into the community, learn over there, and and then you can figure out what you really want to do. So thank you so much, and see you next week, same time, 12:30 on a Saturday. Bye. Thank you, everyone.